Hi, welcome to Tales from the Sky Lounge, where we talk about business, consulting, and venture investing. We get out there in the world and we talk to people who are making it happen in the tech world, and we find those people who have interesting stories to tell and are making a big impact on the venture community. So today in the Sky Lounge, we have Mark Flickinger with BIP Ventures. Mark, welcome to the Sky Lounge.
Hey, thanks for having me. I'm excited to be in the Sky Lounge with you and look forward to today's chat.
Excellent. Well, Mark, why don't you tell us a little bit about your background? How did you get to your current spot in life at BIP Ventures?
Yeah, be happy to. Not that it was a direct path. I think any good background sort of has its own bounces back and forth. But, I always gravitated towards technical things. I was a mechanical engineer in undergrad, ended up rowing for a number of years after school, and really found myself working on things that were new. So I worked in for Church Dwight, which is Arm & Hammer. For those who are wondering, I worked in research and development there on a new toothpaste that they did. I worked in a biotech company that brought cancer and autoimmune disease drugs to the market. So I always found myself working on, whether it was a new company, an entrepreneurial venture, or just a new part inside of a company, it was kind of where I gravitated towards. I went to business school in North Carolina and then was fortunate enough to work at a startup here in Atlanta. When I moved down here, that company was a 6-person company that grew and was successful and had a successful exit. And so about 8 years ago, after that company exited, I was fortunate enough to land at BIP Ventures, right at a time, kind of a critical time for the firm where we were looking to grow and scale our enterprise, right? So just as much as we're investing in companies and helping them grow and scale, my role was sort of this dual role of taking my operational background and kind of love of process and doing it to not only build and scale our own organization to what it is today, but also work with our portfolio companies and helping them grow and scale. So I feel very fortunate to be here. It's been a lot of fun. It's a challenge every day. And I'm one of the people that can say I really genuinely enjoy my job, which is a great place to be.
Wow. Yeah. And people don't think about it, but, everybody pitches these, venture investors and they think, oh, if I just get a check, that's all there is to it. And then you're just kind of sitting around with a bank account. They forget that it's a business and you have like limited partners, and then you have, a whole, process that you run through, not only just for the investing, but also, after the investment, there's a lot of work that happens. Maybe talk a little bit about, what processes surprised you when you got to BIP that you had to set up or that you had to run that maybe were a little bit unexpected in terms of running a venture?
Yeah, I think, you touched on a lot of great stuff there. Similar to companies that we invest in, you end up with these sort of two sides of the table, so to speak. On one side, you have your customers and your clients that are paying you hopefully for your product or your solution you're bringing to the world. And if you take on capital, you have your investors you have to serve as well. One step adjacent to that is the venture capital firm. People are entrusting their money with us, whether it's an institution, family office, high net worth. We happen to do a lot of our fundraising from a high net worth perspective. And that's kind of our DNA and something we're really leaning into as we launch new products. But these are people that that are trusting you with your capital. And so on one side, we have to kind of answer to and be a fiduciary and serve our investors. And then on the other side, we're partnering with entrepreneurs who are taking their dreams and they're trusting us with them. And so, it's a really dynamic, if you think about it too much, probably heavy, but it's a great dynamic where, in order to be great, which I think everyone sort of endeavors to do, you have to be really good at serving both sides of those, right? We need to make sure we're identifying the right companies to invest in, and then we're working with them to help them kind of go farther and faster with us as a partner than they'd be able to on their own. And that's a whole host of process and people. And like, we've done this 100 times and you're a first-time entrepreneur. How can we help you avoid the tripwires and the pitfalls and step around the snakes and stuff so that we can be more efficient as you grow and scale your company? But on the other side, we have to take a lot of that medicine on our own, right? We have to say, like, okay, if that's what we're going to do in that company, we should apply the same logic to our own company. Make sure that if we need to communicate with our investors, we need to have a pipeline, we need to be process driven, and we need to make sure we're getting the right information in the right people's hands. And so, I don't think anything was I wouldn't call it a surprise, right? I was joining a company that had great track record of success before I got here. But in order for us to go to the next level, you just, like anything, you're kind of putting in process, you're instilling more discipline, you're adding talent. And so, it's been a really fun journey over those 8 years. When I first got here, we were single digits, called 6 or 7 employees, and we're close to 50 employees now. And so That's been a really fun ride, and I feel very fortunate to work with all the people that we have as coworkers here at BIP Ventures every day.
So one of the things that might surprise people is how much that back end, just being a business, what percentage, if you had to allocate time or people, what percentage is dedicated to just running the business and keeping up with, what you already have versus kind of going and finding new things and pulling in those great investments? Yeah,
it's a great question. We actually debate this inside our own shop all the time. We're purposely, we say we're different by design. We purposely are going after kind of serving the high net worth market, serving certain types of entrepreneurs, and we kind of know what we're going to do and then go after it with fervor, if you will. And I think in order to do that, it's a different than I don't know if I would say classic, but your kind of classic venture capital model, which is pretty small in terms of the number of employees. I think anyone who's paying attention would say you got a venture capital firm with 50 employees. That is kind of rare in and of itself. Not to say that there aren't, the top 10 or 15 that have hundreds of employees, if not thousands, but we lean pretty heavily into we call it the platform side of our house, right? So call it 50% investors and people that are running the investment, like they're finding companies, working them through the pipeline, robust diligence, working with our IC to determine what companies we invest in. And then post-investment, that's when value is really important, post-investment, for value creation to happen, right? Like, yes, you want to get into the right companies. Yes, you want to get at the right price, but whatever that price is, you need value creation afterwards in order to be successful as a venture capital firm. But we wrap that investment team with a whole host of services, a marketing team, a fundraising team, an investor success team, our performance engineering team that really works with our portfolio companies post-investment. And so we're kind of in this, like, call it 50-50, 60-40 kind of camp where we've invested really heavily in what we call the platform. That's the platform that the kind of our investment team is supported by or gets to stand on in order for us to be really successful. And that for us is critical to success. In order to, we're raising $150 to $200 million a year and deploying almost all of that. And in order to do that, as we find promising companies that warrant additional capital, you need the whole process, right? And so, we're different by design, but I think it's working well for us. So we're constantly, as we scale, looking for ways to refine it and get better. But it's been an interesting journey and a fun one.
Yeah. Well, and then, you always hear about, the venture model is you invest in 10 companies, some half or more are not going to amount to anything. You had a couple singles and then that one big home run funds everything. And I think the world's coming around to, maybe that's a little bit flawed. If you can turn some of your, quote, failures into something that's a little better, right? And then a positive outcome, or you can turn some of your singles into, a little bit better, doubles or triples, so to speak. That's great for everybody, not just your investors, your LPs that come in and put money in your hands, but, also the founders that really want to make a go of it. Not everybody's going to go public or sold to Google or anything like that, but there's also a lot of very positive outcomes if you can grow and develop your company and get it sold, for a good multiple.
Yeah. I mean, we hate losing. I mean, we're a lot of competitive athletes. Yeah. And so, one of the things that we always try and do is if we make an investment, again, it goes kind of back to that responsibility we have when someone entrusts their money with us. We're going to do everything we can to at least get that money back. And so our mantra inside is it's a little bit different than the kind of, we're going to invest in 10 and the power law of ventures is someone's going to return the fund. I think if it's a third, if you just shift those percentages even slightly, right? So if you're third or quote unquote losers, you have a third that are middling and you have a third that outperform, hopefully one that really outperforms. If you can just shift that a little bit, right? So it's not a third, it's 25%. And, you can move that batting average up just a little bit. Even if you're recovering 50 cents on the dollar, 80 cents on the dollar, that's really material to an outcome of a fund. And so we kind of pride ourselves on, we don't give up on anything. and we really try and dig in and make sure that we can do the best, not only for our investors, but for entrepreneurs, right? They had a dream and they partnered with us because they felt like they had a better chance or a better probability of achieving that dream with us as a partner. And things don't work out, right? I mean, the market shifts on you, or you just had the wrong go-to-market motion or the wrong solution as the problem changed. There's a whole host of things that happen, but we owe it to them just as much as we owe it to anyone else. We're not until there's no stone left unturned, we're going to try and find a place to happen. And sometimes that's just finding it a place where it can grow in a different way, right? It may not be an independent business anymore, but you can still have a positive outcome if you get it in the right platform, right? It's the missing piece of an overall platform play, or we thought it was a platform and it's a feature, and so that feature needs to be complemented somewhere else. And so as these things go through from a dynamic perspective, it's really important for us to be in tune with the entrepreneur, but then make sure we kind of do our best to get that in the most optimal outcome that we can.
Yeah. Well, and you mentioned something in passing there, but we're all competitive athletes. So what I know that you're like more than a little bit competitive athlete, and I think you had a rowing background. You mentioned, right, where you were a pretty elite athlete and trained for a couple of Olympics. So I know a lot of people value that kind of experience, and on the podcast we talk about grit and doing hard things. What do you think it is, about people that go through that process that are just driven competitively? I hate losing, right? Yeah. Show me a good loser, I'll show you a loser. But what is it? What lessons do you learn? And then, is that something that, is, do you look for that in founders? Is that, like an engineer that's super hyper competitive, is that still applicable, or is that like a purely sales thing? Or, what is it about being a competitive athlete in this venture business community that is so powerful?
Yeah, it's a great question. And you're right. I mean, that's sort of attributes that people are looking for are those that have kind of faced adversity and figured out a way through determination and grit to persevere. So I think that's kind of what people look for. So yes, from an entrepreneur perspective, yes, from a talent perspective, yes, from our own talent perspective. I think, that doesn't mean you have to be an athlete to get hired. I don't want anyone to leave with that. But I think it sure has the hallmarks that people are looking for, that when the going gets tough, you're committed to the ultimate goal, and you've been knocked down a bunch of times and you figured out a way to figure it out and stay in it, so to speak. Mm-hmm. I think there's something to be said about competitive athletes regardless. I think there's also something to be said about team competitive athletes versus individual athletes. I think they hone different kind of muscles or skill sets, if you will. But like from a team perspective, you have to figure out a way to work with and through others under a common goal to achieve something that is kind of extraordinary, right? I was a rower, as you alluded to. And when a rowing boat rows by, particularly for the untrained eye, but even for the trained eye, you can't figure out who the superstar is, right? It's an 8-person boat with a coxswain in the back, and you don't know which one's the best rower that's moving the boat versus, but collectively they all have to do the exact same thing at the exact same time in order for that boat to go as fast as it possibly can. And that requires people to adjust and mold and work together. So I think that's unique. When it's an individual, so think tennis or golf, or there's plenty of other individuals who are swimming. You're setting a goal for yourself and you're breaking through, I'll call them mental barriers, right? You train so much to a point where like, that's the farthest I can go. I can't even go any faster. And then you figure out a way to push through that. Those are hallmarks of success, right? Wherever you work in the business world, you're kind of looking for the same thing. So I think from a talent perspective, from an entrepreneur perspective, we're looking for people that I coined the phrase inside our shop as humble type A's, right? Mm-hmm. So a type A person that wants to win and wants to achieve and is willing to figure out a solution in a challenging time when they've been knocked down to get through. But you also kind of have to do it in the right way, right? Where you're in a team environment, and particularly in our world, where we're a partner to a founder, but we don't have our hand on the steering wheel, right? It's not, we don't want to run the business. That's not our intent. Our intent is to come alongside and help. And so you have to be able to work as a team, coach player relationship, player relationship, backup starter relationship. You kind of need all those kind of EQ dynamics in order to be successful in the world that we live in, because we're not majority owners. We don't want to go in and run the business. We don't want to come in and say, well, we're doing it our way and this is the BIP Ventures way. That's not the intent, nor is that very successful. And I think people that have been through that adversity and kind of perseverance, and as you've mentioned before, have the grit and determination to play that three-dimensional chess and figure it out when no one else has figured it out. And that's who you need on your team. And I think that's one of the reasons people kind of look to athletes, because they kind of self-select into that just by the success they've had in their background.
Mm-hmm. Yeah, it's not just the killer instinct, right? Just win, 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 win. It's all the other soft skills that come with it, right? Of course, we all want to win, but we all need to just kind of figure it out and grind through. You mentioned knowing when to start a company. So, we've been around a couple business cycles, and, some of these first time founders haven't, and the odds are pretty good that if you start a tech company or any company really, you're going to see a business cycle, ups and downs. So what are you coaching the people in your sphere of influence right now in terms of the business cycle? Is it a good time to start a company? What are you telling your portfolio companies right now? How should people be thinking about, whether or not they should start a business right now?
Yeah, there's two questions. You mentioned our portfolio companies. They've already made the decision to start a business.
They're in, right?
They're in, right. And so, good or bad, maybe they started it in 2020 or 2019, and things went up and things went down, and they're still running their business. I think, for those people, the message is pretty simple. If you have a solution to a known problem that can't be solved by the market today, that doesn't change when the economic market, like the macroeconomic trends go up or they go down. And so I think you have to pivot and evolve and be gritty and figure out a way to kind of get through this cycle. But there are many of our companies that are still successful, right? They're able to grow revenue at a pace that actually counteracts the compression of multiples that we're seeing. Mm-hmm. And so from a valuation perspective, it's not like they're falling off some cliff, right? They're still creating value in their company. They're adding revenue. They're solving customers' needs. They're getting customers to renew. If you can do that in a down macroeconomic, you're onto something. That is a pain pill, right? Not a vitamin. That's something that needs a solution. Yep. And you got the solution and you're moving forward. So I think for our entrepreneurs that are already started the company and they're in the middle of it right now, their goals are different. They have to change horizons. It's not going to happen as fast as they wanted it to. But if they're still creating value, let's build the motion so that we got 18 months, 24 months of runway. We're not having to go back to the market because we made poor decisions now in terms of capital rationing and just being disciplined. I think from an entrepreneur that has not started a company yet, I think there's this kind of artificial rush to start businesses when there was all this money in the market. When money was free, call it 2020, 2021, even parts of 19 before COVID hit. There was this rush to start a business, and there's like, well, everyone can start a business. Just like put an idea on a napkin, and we'll raise some money, and off we go. We'll start a business, And I think that's cool and probably exciting, and would be able to get some businesses off the ground that probably wouldn't have started. It's also kind of scary, right? You're going to have a lot of businesses that maybe should have measured a couple more times before they got off the ground. And so I wouldn't say that now is a bad time to start a business. I think it's different though. And I think it requires someone to measure at least twice, if not 3 or 4 times, about, what value am I going to bring to the market? What problem am I going to solve? Have I done enough research with the customers to know that when I come out, I've got a good chance of having product market fit? And then when you start that business, go slow. You're going to have a little bit of capital if you're fortunate, or you're going to do it on your own to prove that it works. And then, as you're going forward from there. So it feels like in some ways healthier, but in other ways harder. And as an entrepreneur, you should just react to that, right? That doesn't mean yes or no. It's like, you're not in a rush you're not in as much of a rush as it felt like in 19, 20, and 21, even the beginning of 22, really. Like, so make sure you get it right and go slow to get it right. Because if you can build a business, I mean, everyone knows the statistics, but there's so many great businesses that are built in down markets. Mm-hmm. Because that, again, back to the pain pill vitamin comment, like if you're solving a problem in a down market and people are buying from you, and then when that market comes back and you've built all that process, and you've built all this down, and you've established yourself and your solution's working, like, you're going to take off. So, we are looking at it right now as a great time to be investing, because there are great businesses that are being started, being built, being scaled, and it's not as competitive a capital market as it was a couple of years ago.
Yeah. And I'm an LP in another fund. I'm sorry. We set our annual readout, and, he called it a, investor friendly market right now. But I think it's a blessing in a lot of ways. What's the old Navy SEAL thing? Slow is smooth, smooth is fast. Yeah. So, hey, slow down, get it right. Like you're saying, measure a couple times. And if you got product market fit and you can sell painkillers, not vitamins, like you're saying, you're going to sell stuff. You're going to get in the market, and there will be a market for it. It just might be a little slower or a little bit less than, the good times. But then you're in business, when this uptick's going to happen. And I don't know about you guys, but from my seat, last, Q2, Q3 wasn't a great time. That Silicon Valley Bank hangover, it really impacted a lot of people. Everybody kind of went, whoa, we don't know what to do, so we're going to do nothing. Right. And I think, Q4, a lot of people reset their budgets, and then everybody's got, they've gone through that annual planning cycle now. So I think people have things are starting to move again, from what I'm seeing. I know you do the state of startups, so what are you seeing from your chair? Definitely a different perspective, from mine. Are people starting businesses? Do you feel like, angels or venture or maybe even private equity are going to turn the spigot on again? What does your report say about the state of startups right now?
Yeah, a great question, and one that I like talking about. You alluded to that little Silicon Valley Bank thing last year. That sort of, I had a media flashback of what was going on. That was certainly unexpected for all of us. It's amazing how quickly things can happen. I think 2023, interestingly, there was a statistic that came out. I think PitchBook published it, that almost 2 out of every 5 venture capital firms, so firms, not individuals, but firms that invested in a company in 22 did not invest in 23.
At all. So wow.
2 out of 5. It was 36%. Dang. So almost 2 out of 5. That's massive, right? I mean, there's thousands of venture capital firms that have essentially 36% of them sitting on the sideline for an entire year, an entire calendar year. And that's going to change the dynamics of what's going on. And I think you're right. It was a combination of, people not having discipline when they're investing in 21, 22. Then you have those companies needed another round in 23, and people were like
everybody needed a round.
We invested at 100 times. I can't invest at 8. And so I think there's a pretty big punch in the mouth or stomach, or where people had to catch their breath in 2023, and Silicon Valley Bank certainly didn't help. But I think you're right. As you kind of got to the end of the year, people are like, well, we're in the business of raising and deploying capital. We can't sit on the sidelines forever. And I think with some of the macroeconomic trends that we're seeing now, with a little cooling of inflation and still a healthy job market and economic growth happening, I think people kind of are coming into 2024. It's early still, but in 2024 with that mindset, as you alluded to, which is, all right, we're ready now. This is the new norm. We've had enough time to get our feet under us. We're excited about operating in this environment now, and we have to kind of operate in this environment. And I'm speaking specifically from kind of the investor perspective when I say that. And so we do this report every year. It's because State of Startups in the Southeast, so it is focused on the Southeast. It comes out in October every year. And I think what was really interesting, I mean, it's Southeast focused by design, but what's really interesting about it is that, like, yes, there's been a contraction of kind of everything you could think of when you look at your high watermark of kind of 21, right? So whether it's multiples have come down and dollars deployed has come down, number of deals being done has come down. When you kind of roll all that up in aggregate, you kind of, it's like the forest through the trees, you kind of lose focus on the actual growth that's happened in the private markets kind of en masse around the country, but in particular in the Southeast. Even in 2023, we're ahead of where we were in 2019 in terms of number of deals and dollars deployed when you look at the Southeast in aggregate. So we had this massive up and this kind of down, but we're still, if you just sort of straight line everything, we're still growing and maturing as an ecosystem pretty dramatically. And I actually think that because of COVID, which is kind of silver lining in the way that people were working, I mean, the ecosystems in the Southeast are in some ways the strongest they've ever been. Right? I mean, people are building companies in places they weren't building companies before. Capital's looking for those companies in places that they weren't looking before. You can just get a lot of more like work done before you have to get on an airplane and travel somewhere because people are used to it. And so I actually think that, the Southeast specifically, it's a much healthier ecosystem in terms of the companies being built. We're now getting this kind of top to bottom where we always had strong seed and pre-seed, struggled a little bit from a traction perspective, call it that single digit ARR company. Mm-hmm. And then, not recently, but call it 8 years ago, 10 years ago, those companies would leave, or they'd have to go somewhere else to attract capital. They go to the West Coast, they go to Boston, they go to New York. But now we're having these billion-dollar companies stay and build and exit even and stay in the Southeast. And that is sort of its own cycle of momentum in and of itself, where those entrepreneurs then start new companies and they kind of stay and grow and scale. So, it's actually been really fun. We've been doing that now for, I think, 6 or 7 years. We've done this data startups in the Southeast. So kind of catching it in the 17-ish time frame up through now. And it's been a tremendous, healthy maturity. And I'm really optimistic. I think there's a lot. If you read the headlines, there's plenty to be concerned about. And those headlines are not wrong. But if you kind of tease the data apart and you look at what's going on, the average valuation of deals being done is up. The amount of capital being deployed into it is up. The number of deals where they're being done as far as diffusion across the Southeast is healthier. But yeah, there are less companies being invested in. To my comment earlier, it's not necessarily all bad, right? I mean, I think it's good to do the homework before you start a company. And, when there's no guardrails and it's easy to start a company, it's easy to start a company. And,
right.
But there's still good companies out there that are starting and being funded. And being exited, right? I mean, we just had an exit in the end of January. That was a company we were only invested in for about 2 years.
Hey, good job.
That's a great one, right? Great outcome for our investors. And most people would say, well, 2 years ago, how could that be a good outcome if you invested 2 years ago and valuations were high and you were able to exit now? But, it's a good company that was in a unique space and was doing a good job.
Yeah. What, do you feel like there's a lot of dry powder out there, or do you feel like a lot of it got soaked up? Just kind of nursing people along after the SVB desert period in the market. Yeah. I know a lot of people had to write that second check they didn't count on. Mm-hmm. Is there powder out there for people with good ideas?
I think there is. I mean, I think there is. Yeah. So that it's not easy to come by. I think you're right. People who invested for the first time out of a fund or whatever vehicle they were using, they really had to reserve really heavily. And I think that limited the ability for them to add logos to a fund, as an example. And so they reserved heavily. So they're putting a second round in on a convertible note or, some way to kind of buy time for that company to figure it out before the markets come back. I think the markets are coming back. And that's just I don't have data. It's anecdotal data to say that. But I do think 24 will feel momentum, whether it happens in Q1 or it doesn't happen until Q4. I think we'll have some positive momentum in 24. Where people with dry powder they know what's going to happen with their portfolio a little bit more, and they're willing to then invest in new logos, right? Not just sort of saving their existing portfolio. And I think their investors or their LPs will probably demand that, right? And they don't, they gave them money under a certain promise or premise of what they would do. And so I think everyone like, okay, we're figuring out how to operate in this new dynamic or this new world. And so, now I'm going to go do that. I think do you guys out there, but
yeah, do you guys have a fund lifetime? So like I know you have, a lot of places have fund 1, fund 2, fund 3, and then you raise a chunk of money and then, or commitments, right? And then there's a set period of we can place bets during this window. And then, a little past that, is when we want to be unwound from all this stuff. Do you guys have those kind of constraints? And then maybe talk about, is that something that's going to drive some of this investment? You can't not invest, at some point. You're going to run up against that wall of the fund lifetime, right?
Yeah. There's some great, that's like a softball there. I've got all these answers for you. So the traditional fund, we're on a 3-year cycle. So we raised fund 5 in 2021. Okay. So 3-year cycle, we typically deploy that capital in about 3 to 3.5 years. So we raised the next fund kind of right as we're running out of dry powder at our anchor fund. And typically your investment window in those funds is 5 years. So you have the ability to deploy capital up to 5 years. And so probably some of the instinct that I have of people coming off the sidelines is if you only have 5 years, you can't waste 2 of them sitting on the sideline if you want to deploy all the capital. Yeah. So we're on that cycle. There's some restraints around that are challenging from a GP perspective. So from the seat that I'm sitting in terms of how you invest in companies, because companies, they don't grow linearly, right? They don't just like grow on this easy glide path of growth.
Yeah, it's never textbook.
You're figuring something out and you're building all this foundational stuff. It doesn't show up in revenue, so therefore it doesn't show up in valuation. And then all of a sudden it kind of linearly spikes up. So we actually launched a fund last year that's an evergreen BDC fund. And one of the reasons that's so attractive, I think both for LPs and for entrepreneurs, is because it has a longer timeline or a longer horizon. And, from an LP's perspective, there's a whole host of things of what I would call reduced frictions in that fund that allow them to kind of get in when they want to. They don't have to have committed capital sitting on the sideline. It's a better structure where you can say, I want to do X number of dollars and then 100% of that kind of goes in when it goes in. But from an entrepreneur's perspective, which just kind of gets back to your question, sometimes it takes more than 10 years for a company to be built. If you invest in year 4 of a fund's life and you have to cut that fund off at year 10, you're really only giving yourself 6 years for a company to scale. On average, unicorns are like 11 to 12 years for them to get to be at that $1 billion valuation. And so you're like cutting your time in half. And if it is truly curvilinear, the second half is when you want to be on the ride, right?
Absolutely.
And so, we've spent a lot of time innovating from a product perspective to bring stuff to the market that I think really helps both the investor to capture that upside, but also the entrepreneur. I mean, it's really disruptive for an entrepreneur to say, hey, you're doing a great job, but I need to sell because it's the end of my fund's life. And so
it happened to me. I was in a turnaround gig and for somebody else. And, we got to the end of the fund and they were like, okay, it's time to have an auction. Let's hire a banker. Yeah, it's like, wait a second, we're just figuring this stuff out. What's going on? Well, I think founders don't understand that. There's like a little bit of, a business decision in the background. Yeah. So it's great to hear that you guys are figuring all that stuff out. I'm sorry, I interrupted your thought there. But
I think the other thing is the ability to raise capital is somewhat dependent on these exits, right? So this exit pileup that people talk about, you're asking, like, you get through 3 years, you raise another fund, particularly in the institution market. If your investors are institutions, they're funding year 9 or 12's fund of a new fund with exits from year 1, right? So if you have this, you're not having as many exits come in and out, then it's hard from a commitment perspective to commit more capital to whatever the latest fund is. So I think we need to get through that kind of log jam, if you will, where we start having some exits happen, where companies move from venture to growth equity to private equity to public markets, or, that kind of flow up, through maturity. I think, and because of that, I think we will have more investing happening with the dry powder as it stands, and then you'll see people start raising new funds going forward.
Yeah. Well, I mean, I think it's a great time to jump in and start a company. And, if you got product market fit, you can figure it out, start small, use this time to to really build solidly. Like you're saying, you have a little bit of time. And then I would put it, I'm not in your shoes. I know you can't make, solid predictions, but, I would say 2 or 3 quarters, I think it's going to be a completely different ballgame, and it's certainly past the presidential election. I'm not sure what's going to happen, but something spectacular is going to happen. Right. Yeah. So, that's always a change factor.
Yeah. I think I have a phrase that I use a lot, is this sort of go slow to go fast phenomenon. Mm-hmm. And I think in some ways, the way that the market is now forces you as an entrepreneur, if you're to launch a company now, it would force you to go a little bit slower. And that's not such a bad thing, right? Mm-hmm. I mean, there are times when you have to go really fast just to capture an opportunity because markets will shift on you quickly. But it's not such a bad thing to kind of have the feedback loops that you can get and to go slow and to sell into a difficult market. Because if you hone that skill, right, if you sharpen that sword, so to speak, when the time is right, you know exactly which fire to pour the gasoline on, and that company will really take off. So I agree with you. It's if you don't adjust your mindset and you think it's 21, that's a bad time to be an entrepreneur to start a company. But if you adjust and you see what's going on, people still have problems that need to be solved. And at the core of what we all do, that's what we're doing, right? I mean, from an innovation perspective, that we're trying to solve problems.
So talk about, like, I know you have to serve on boards as part of your role. And then, that's got to be a super critical thing that you're doing right now. When you're on that board and you're talking to those founders, and you're telling them right now, hey, let's work on infrastructure. Let's work on solidifying the company. Talk about that board dynamic. What are boards talking about right now? What are the advice that you're giving your companies? I assume that everybody's kind of past that. Oh crap! We're about to run out of money. I need a check. Okay, what's the next conversation that you have or you are having right now with your boards that you're exposed to?
Yeah. I mean, I think that we're all about out of money conversation happens all the time, unfortunately. But,
funny story before you get going. So I was in a board meeting. It shocked me where it was like a year ago. And this company was like, the unicorn 3x, 4x, 2x. And you're like, we want to grow at 3x. Here's a plan. And then the investor said, I'd rather you grow at 60% and me not have to write a check then you grow, me have to write a check and you grow at 3x. And then as a founder where it was always go, that kind of blew my mind. But I think it turned out to be a super positive thing for that company.
Yeah. I think, it sometimes, growth at all costs is exactly what it is, right? It's growth at all costs, and that doesn't necessarily always equate to a great outcome. I think from a board perspective, a lot of times we're transitioning when we invest. We're often first institutional capital. And so you're forming a board for the first time, where someone has been kind of friends and family, bootstrapped, had some success, and suddenly you're bringing in a company. We've had deals fall apart because we couldn't get the proper governance in there.
Okay.
Just because the entrepreneur didn't want it or they weren't ready for it, but I mean, the first function of the board is to help everyone do no harm. Kind of simplified down is do no harm. And in order to do that, you need kind of the right checks and balances. You need the right structure and you need the right authority for the board to operate within that group. And so when we approach that, we're really trying to protect everyone, not just ourselves. But of course, we're first and foremost ourselves and our investors, but you're really trying to protect the entrepreneur as well. To kind of have the right governance in place and the procedures and the structure so that we can continue to grow and scale in a way that kind of quote unquote do no harm within the organization. I think other than that, we really look at ourselves as business partners to the entrepreneur. So it's a board role or a board function where you're looking for a board to have advice to be able to help you, unlock things that you can't unlock on your own. Solve some go-to-market challenge, build a sales organization, like things that as an entrepreneur, if you're a technical founder, just to use an example, you haven't done all that kind of go-to-market, marketing, sales, business stuff. So you're looking for someone to help you do that, particularly if you stay as a CEO. And so I think from a board perspective, we try and come in and help. And it's funny, that's not really the board's job, but we view that as part of our role as a board member But that's a lot of rolling up your sleeves and kind of working through identifying ICP and what's working, what's not working. Is the promise of the product actually living up to it in the market? Are we doing what we said we were going to do from that perspective? But I think as an entrepreneur that has not built a board yet, and you take on that kind of first institutional capital, look at building a board as an opportunity to help your business go faster and to help you protect yourself from what you don't know, which can be really scary, frankly.
I've seen it both ways, right? And I've seen exactly what you're saying, where you go, we're going to get venture capital. Okay, we're successful, have a party. And they're like, whoa, like just get started, buddy. Right. And then they go, well, what do you mean I don't have, 50% control? I can do whatever the heck I want, as a, you get those personalities. And then I could see like a lot of those kind of crumble. And then I see the other side where, people grow and they like, I was a technical founder way back in the day and, took money in and they said, hey, you need a CFO, I don't know any CFOs. Right. And then, so no problem. We got a guy. Right. And then they helped me. Right. And I think if you go into it with that attitude of, I know what I know, I'm so glad you guys are here. Can you please help me? And then let's collaboratively get the right people in the room, and then help takes a lot of different forms, right? It can be board members that you see once a quarter, once a month, every other week, whatever it is. Mm-hmm. And then it can be, also, everybody's Rolodex that comes, that's on the board. Yeah. And then, is in the management team. So, I think it's a very, interesting dynamic of if you can get that right, if you can start carefully building the board and then, the adjunct, support systems, I think that is a supercharger. That's a whole nother level. It's not just the money. It's more so about the help that you're going to get. You get a whole new team for free, basically.
Mm-hmm. I think you're right.
Think through these things.
It's that, taking money from any institution, is that venture capital is kind of what we're talking about today. It's really like in some ways it's like a marriage, right? You're going to be together for years if you're successful and you're able to do it the right way. And so, pick your partner carefully and make sure that they're bringing what you want to the table, right? It doesn't have to be more or less. That's your determinant as an entrepreneur, but make sure they're bringing what you want to the table. Often, our stance on that is more than just a check, but not every entrepreneur wants more than just a check. But you're picking a partner, and then they're going to come in with one perspective and their background and experience, et cetera. And then you have this, when you build a board, you have the opportunity to have independence, and those independents should add. Right, that should be a yes and or a plus. Don't just, I would say worry less about controlling the board, which happens sometimes where you put friends on or people that you're close to, and more about positioning yourself to be successful to go capture the opportunity that's in front of you. And if you can get you mentioned it, if you can get a superpowered board member on as an investor or as an independent, and they can open doors for you, and you can get direct access to a C-suite of a potential customer, and they can give you feedback on your product. That is hugely impactful in terms of the acceleration of your growth, where you can say, hey, yeah, that's a problem. You're on the right track, but you're not solving it the right way. Here's why.
Yeah, wow. It's the unlocks, right? Is that
so empowered?
You said something, and then when I was doing this, I did this, and then why don't you go call so-and-so? And then everything unlocks, and now you have a whole new market, and off we go, right? Yeah. It's not just linear, right? It's those unlocks as you go.
Yeah.
Well, Sky Lounge is all about travel and adventure. Surely you have a good Sky Lounge story you'd like to share with us. What's your kind of favorite Sky Lounge that you've interacted with?
Yeah, it's a great question. I mentioned before we started that this might be the hardest question you've asked me the whole time. I think I've been fortunate that I haven't had to be, somewhat by design, but I've never been on a travel every week job, and so I think my travel is a little bit more sporadic. I'll tell you two stories. One, I would say my kind of favorite in my head Sky Lounge stories are the ones where you're in a Sky Lounge, and they're always packed, by the way. It doesn't matter when you're traveling, morning, night, where you are. It's just everyone's in this. It's packed all the time. It's packed, but there's always that person that pretends it's not packed, as in having some strategic meeting openly on speakerphone in front of hundreds of people, where everyone's like, I feel like I'm in this strategic discussion. I should tell them not to do that. That's a bad idea. Does he want us all the way in? And so I always think of this Sky Lounge. When I'm there, I'm always like, can anyone hear me? I don't want to disrupt anything. But there's always someone with the phone. They're holding it out here on speakerphone. Like, no, you tell so-and-so not to do that.
We can hear you. Calm down, buddy. It's okay.
Yeah. So, I guess that's sort of a somewhat generic, but I feel like every Sky Lounge I've ever been into, something like that happens. But my most recent travel, I'll call it a horror story, was I was trying to get up and back. So one of those, like, I'm going for one meeting, I'm going to be back, I'm gone for less than 24 hours. And so I was working in the morning and I was working at home because I didn't want to waste the time to go to the office. And I was on a meeting that ran long and became a little bit like, I can't get off this meeting. I got to get in the car and take it from the road. So I was grabbing my stuff and I was running out the house, got in the car, got all the way down to the airport, which is like a 30 to 35 minute drive. I got to Clear to go through the Clear thing, made it through Clear, no problem. And after Clear, I went to put everything back in my pockets and I realized I didn't have my wallet.
No.
And I'm like, how could I have possibly gotten through security and I didn't have my wallet? And then I thought to myself, can I make it? Like, if I get up,
I can do this. I don't have to eat.
I got Apple Pay. Like, can I get up and get back without? And I realized that they didn't have Clear at the Indianapolis airport. So if I got to Indianapolis, there was no way for me to get back. And then if they risked, like if I was the random person that got pulled out of the line, then I would be stuck there. And I called my wife and she said, well, I can ship it to you. I'm like, there's not enough time for it to get up there. And I'm like, I'm just going to pause, right? Go slow to go fast. I'm going to pause and make sure I can get not only there, which I know I could, but I can actually get back. But how embarrassing to be like going on your work trip. I didn't have my wallet. I don't remember as kids or something disrupted my morning routine when I put like my phone and my wallet and my stuff in my pockets. And I never put it in the morning. And then because of the rush of the meeting, I never recovered. So I've now put steps in place so that I would have ID and security in my bag, in my wallet. I could probably make it there and back.
Yeah. I've got the backpack set up. It doesn't go anywhere unless I'm out the door and there's
exactly. That's what I need.
Yeah. There's missing places. Right.
I got lazy.
Hey, it's been great having you on the Sky Lounge. Where can people find you on the internet if they want to interact with you after this?
Yeah, sure. I obviously, BIP Ventures has a website. You can reach out to us at any time. So we're happy to communicate with anyone in that respect. I am on Twitter, X, my bad. We're on Twitter, X, MarkFlick2, and happy to interact with that perspective. But I think, we're easy to get in touch with here at BIP Ventures on purpose and look forward to having a conversation if anyone wants to reach out to us.
Mark, it's been great having you. And thank you for being in Tales from the Sky Lounge.
Hey, thanks for having me, Todd. It's been great. Really appreciate the time.
Thanks for joining us in the Sky Lounge. Please like and subscribe to hear more from Tales from the Sky Lounge here and anywhere else you get your podcasts.